The all-share index ended up 1.7% yesterday, slight improvements from the days before. Just give us an overview of the markets. I mean, we've seen a pullback globally. We've seen the rand weaken a little bit slightly. What's happening?
Yeah. You know, I think the markets yesterday were largely anticipating that nothing would happen on the interest rate front.
Yeah.
And when we got this surprise for most economists, I must tell you I wasn't surprised, but I think most of them were pretty surprised that this happened. You know, after that, it was touch and go as to what was going to happen on our market. I think some people would have thought, well, you know, this is going to give a bit of a fillip to our market, and it did. A lot of people thought that the rand would go weaker because you're getting lower rates coming through. In fact, I think a lot of observers are missing a critical point here, that foreigners particularly buy our market, not necessarily because of any sort of carry trade possibilities, but because they see South Africa as being an investment destination. And with lower rates, that means that you know, it's seen as being a better investment destination. So I think overall, it was probably taken very, very positively indeed.
All right, well, the South African Reserve Bank made its decision, a cut of 50 basis points, as you say, caught many people by surprise. But broadly, central banks across the developed world have also been sitting in Monetary Policy Committee meetings. The Fed's decided to leave rates unchanged. In the UK also, decisions have been made. What do you make in terms of decisions taken by the Reserve Bank, by central banks on interest rates and the indication of the global recession bottoming out?
Yeah, you know, they all acted very quickly and very profoundly to drop rates and try to get the economies moving.
Yeah.
Interestingly enough, they found quite early on that wasn't going to be enough. I mean, they took them down to virtually zero. So then they had to go in a second round of quantitative and credit easing, and that seemed to do the trick. And now what we're seeing, and I hate to use this terribly hackneyed term, green shoots, we're seeing that everywhere. There are so many indications now that things are changing, that we do appear to be at the bottom. In South Africa, we are a bit behind the curve, make no mistake. We're probably about 6 months behind the curve. We're probably getting towards the deepest part of the recession. And I think it was interesting from what the governor said yesterday, there were these heavy hints that next week's GDP figure is going to be pretty bad.
I mean, he's had to factor in quite a few things. Tito Mboweni, he says that the second quarter figures for contraction were much bigger and deeper than what was initially expected. We've seen a drop in retail sales this week. We've seen manufacturing down to 17.1%. When are we going to see this economy clawing back, do you think?
Very good question. And
the crystal ball, have a look.
I think all of us, you know, we've been watching things like, for example, passenger car, you know, the vehicle sales. We've been looking at retail sales. We're thinking, when is it going to turn? And at some point in time, we know we've had a very profound reduction in interest rates, 500 basis points since December. It will eventually work through to the system. I've been a bit surprised that it hasn't happened already. And I would have thought over the ensuing months it's going to happen. But having said that, you know, we may, depending on how some of these factors you mentioned pan out over the next few months, we may see further cuts from the Reserve Bank.
Okay, let's look at results that have come out in the last 24 hours. Standard Bank, that made a lot of headlines yesterday, obviously reflective of what's happened within the financial services sector in general, bad credits, bad repayment of debts, credit card debts still very, very bad, mortgages still in distress.
Yeah, you know, I think Standard still remains firmly the analyst's favourite. It's a bad result, make no mistake. I mean, when you were down 32% or thereabouts, it's not a good result. But I think if you look beyond the immediate results, you see that certain things that they've done, the tie-up with ICBC in China, for example, that has paid, that's resulted in profits, I think, about $14 million thereabouts. Their move into the rest of Africa. It's a very clever long-term strategy. Sure, short-term, we're seeing big impairments. And that comes back to what your earlier point. You know, unless and until we start coming out of recession, we're not going to see a positive improvement on the banking sector or the retail sector for that matter.
But obviously there's a direct correlation here between what the Reserve Bank does in cutting interest rates and how it reflects on the earnings or the ability of banks to operate. And all of the banks have also had this additional impact of what's happened with the life insurance link-ups. And Standard Bank has had to factor in the losses of 1.2 billion at Liberty, and it's affecting the broader scale of their repayments and the ability to move forward.
Yeah, no, you're right. Look, it's unfortunate. They say that it's a big chunk that they lost.
Yeah.
And, it comes back to, it really means, I think, effectively that the bank is saying, well, we're probably going to take a closer look at how your investment strategy is. Now, that's interesting because, banks and insurance companies, they tend to have a somewhat different way of operating in the investment market.
Yeah.
So it'll be very interesting to see what materializes over the next few months because of this.
All right, the good news, though, is that Germany and France, two of Europe's big economies, have now shown growth of 0.3% respectively. Germany is the third largest world economy, one of the largest exporters in the world. What does that mean when Germany says, okay, things are beginning to look a bit better for us?
Okay, that comes back, I think, to the earlier comment about these so-called green shoots. Yeah, the Eurozone generally, as a whole, we're not looking to see much improvement in the course of this year. We're looking to see that area staying in recession. But you're quite right. When you see the biggest single component starting to look a bit better, we have just to, I think, to bear in mind that we mustn't get carried away with this. Green shoots are precisely that. It's not rah, rah, rah. Here we go back to the situation we had last year. It's an indication of nascent recovery. It's slow and hopefully it'll be sustained. And this is the big fear, that you get a recovery that doesn't quite manage to be sustained, and then you go down again, So we have to watch this one very carefully.